right. So overnight, global markets turned cautious after a hawkish surprise from the US Federal Reserve and an underwhelming US-China summit. The Fed cut rates a quarter point as expected, but Chair Jeremy Powell cast doubt on another move in December, sending bond yields higher and knocking Wall Street off its highs. Now, US equities eased from records. Big tech led the pullback as AI spending fatigue and tighter liquidity weighed on sentiment. After the close, Amazon and Apple both topped expectations, lifting Nasdaq futures slightly into Asia. Now, Europe was broadly flat as the ECB held rates steady and hinted that policy may remain restrictive longer than markets hoped. And in Asia, Japan's Nikkei gained on weaker yen while Chinese shares slipped as the Trump-Xi meeting delivered symbolism rather than substance. Now, Treasury yields climbed, gold's rally stalled, and oil eased back on supply headlines. So the dollar held firm while the yen continued to weaken toward intervention levels. Here's how to approach it today. Keep an eye on mega cap tech. Any follow through from Amazon and Apple could support semis and AI infrastructure names with yields pressing higher. Be cautious, chasing high beta risk, defensives and cash flow quality. Still rule short term. For the Australian market, the open should be steady to slightly higher. Watch local tech names following the US-led energy stocks for direction from crude and miners from any reaction to China's muted tone and trade. The banks could feel yield pressure if global bonds continue to sell off and the Aussie dollar remains in focus around 0.66. Strong CPI data could keep it supported. Keep positioning balance between tech strength and yield sensitivity.